Well, let's move on. And we have the management of Kaynes Technology, which is on our radar. The cabinet has approved the proposal of Kaynes Semicon to set up a semiconductor unit in Sanand, Gujarat. This is about 3,300 crore chip assembly plant, to be specific. What are the plans here? What would the revenue potential be? We have the managing director and promoter, Mr. Ramesh Kuninan, and the company's whole-time director and CFO, Jairam Sampath, joining in. Gentlemen, great to have both of you here. Appreciate your time. Rameshji, if I can start by asking you, congratulations first up on the approval. I think we've spoken about this in the past, and you at that point said that you were awaiting government approval and that nod has now come through. So tell us, this is a packaging unit, right? I mean, sort of testing and OSAT facility, testing and packaging facility. When do you sort of...
It is a OSAT packaging facility and test facility.
Okay, got that. So what are the timelines here? When will this be up and running? What is the investment? What is the overall revenue potential from this? And what are margins going to be like?
We have done all our planning stage. We have acquired the land. So we should be able to quickly start the construction activity. Construction will take a year's time. And on the third quarter of 26, we are expecting production to start. We have lined up with various companies for starting the business. And this is where we are.
Got it. Q3 of FY26 production will start from this plant.
Yes.
What is the revenue potential and what are margins in this business going to be, sir?
Yeah. So revenue potential in this, typically this is an asset-intensive business. So for every rupee of asset capex on a gross basis, you get about 1 to 1.5 rupee of sales. So in a full-fledged manner, when this entire project is implemented, we would probably have about 4,000 plus crores of revenues coming in. In terms of margins, we've, I think from beginning itself, focused our capex on more on the advanced packaging area. So that's what is the more remunerative area. So about 25% of the capex is aimed at the legacy packaging, which is typically available in South Asia and all that. Whereas the 75% of capex is aimed towards advanced packaging, which is more the province of Taiwanese and Japanese and Americans. So we conceive of a world which have more requirement for advanced packaging, and also we don't want to be just another mass OSAT player. We want to be an integrated EX player with play in advanced packaging, which is what we expect will have a good demand going forward.
Okay. Mr. Sampath, so if you can give us a number, what are margins then? 75% towards new packaging, only 25% on the legacy side. So obviously better margins, right? Could you give us some sense of the numbers?
Yeah. So at this stage, all we can say is that it will be margin accretive to the current business. So whatever, let's say 15% EBITDA that happens in the ESTM business, these businesses eventually will have more than that kind of an EBITDA, obviously because of that intensity. And we endeavor to make similar ROCs too, by making sure that we do more of advanced packaging work.
All right. Hi, good morning, gentlemen. Congratulations on this development. A quick couple of numbers. 3,300 crores is the total investment, but the outflow from Kaynes will be around 800 crores, 25% of the total mix, because central and state governments as well will be putting in. Is that a fair number to work with?
Yes, you are right.
All right, 800 crores. So that's the investment that's going out of y'all. Now, you said that the peak revenue potential will be around 4,000 crores. I'm reading a couple of sales notes that say that by 2030, they are working with a number of close to 3,500 crores of sales with high teen margins. They're referring to 18 to 20%. Is that doable at current reckoning?
Yeah, so at this point in time, very speculative in nature because we've not put the first machines on the ground, but the plan is to get superior to the existing company's margins.
Yes.
Because the asset intensity is much higher. So whatever is the current ROC, we want to target that ROC. So whatever is the required margins for that, I think will be delivered. So that's why I moved the capex more towards the advanced packaging, which is more remunerative.
Got it. And, you're going to be commissioning it in third quarter of FY26. I believe it takes 2 to 3 years to reach optimum levels. So by FY29, we should see that optimal level. Would that be a fair estimate?
Yeah, FY29, FY30. We would like it to be earlier, but being a new territory, so we are a little guarded here. But I think we will gain more confidence once we have the first product out of the door. And so we are looking forward to completing the POCs this year, FY25 May. I think along with construction will also get completed. Next year, we have a couple of quarters to kind of get the POC approvals and so on. And like Rameshji said, the commercial production starts off in third quarter. Fourth quarter, we'll have significant revenues, maybe 200 crores plus kind of revenues. And of course, FY27-28 will ramp up the production. And by FY30, we probably reach the potential for this level of investment that has happened.
Sir, just to clarify on the point, you said that the peak revenue potential is 4,000 crores. So is that the annual run rate that you're talking about at peak capacity when you're operating at 100%?
We don't operate at 100% technically, right? So generally about 80% plus. So 80% plus can deliver up to about 4,000 crores. It entirely depends on what kind of work we do. So, but typically the asset turns in this business of about 1 to 1.5. So we're hoping to kind of set up our businesses and our portfolio of customers in such a way that we get a slightly better run rate on the asset turns. So considering that about 3,300 crores of assets, so we think that we can do about 4,000 crores at about, it's 85% capacity utilization.
Got it. Jairam, just one last briefly, if you can respond to this. The Hyderabad smart meter facility is also started, right? What is the potential here on the revenue side?
So this smart meter facility was inaugurated last month, and I think we would do about 3.5 to 4 million units of smart meters per annum to begin with. And we will add capacities. These are fungible capacities. We could do typical EMS business too. So we would add some more capacities depending on how fast we have to execute the smart meter orders, which are right now coming at a fast clip. So we hope that the second factory also will start off shortly in the same location.
And by FY26, the number the street is working with is around 800 crores from this facility for smart meters. Doable?
Yes, it is doable.
Yes.
Oh, we appreciate it, you gentlemen joining in. Congratulations. The market likes what you all are saying. And as we speak, the stock has moved to the high point of the day. Thanks a lot for joining and giving us an insight on this recent development as well as on the smart meter facility.